Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 25th of November. All right, now just having a look at the US numbers. If you go through, basically all up, the numbers are still consistently solid, right? So let the good times roll for the dollar. The dollar index continues to the top side, and I cannot see this changing for the foreseeable future, right? Until other central banks start to chime in. And one thing I'd like to sort of stress is don't underestimate the potential of a trend to just keep going, right? I know we haven't seen this for a hell of a long time. And for those traders who aren't aware, you see trends like this on Euro. Now sterling's breaking down. The Aussie's heading, like I can see the Aussie going down to 66 cents, 67 cents pretty quickly. And after yesterday's rate hike in New Zealand, bang, the currency just gets crushed. Now, why do I think you just get on the US dollar? Well, everything fundamentally for the dollar is positive. The Fed's got a plan. There's no uncertainties around that. If anything, the strong data is bringing forward the plan, the forward guidance for interest rate hikes in the US. Now, it's a long way from interest rate hikes, but it doesn't matter about that, right? It's the perception. So with these situations, other countries like Euro, right? There's situations around the pandemic and lockdowns and all sorts of things. A lot of uncertainty that disrupts European growth, employment, the whole sham, bam, wham, thank you, ma'am. The whole thing breaks down, right? Now, sterling is in a similar boat, obviously very close to Europe. Australia and New Zealand still in lockdowns. And, there are signaling when that's going to end. But I tell you what, they are so far behind the US dollar. This thing is going to continue. Now, so I think all these pairs keep heading to the top side. I mean, the tricky one is obviously dollar CAD, right? Because it's so connected with oil. And Canada being so close to the US, they usually do move in tandem. But it was overcooked down here at 124. 126.60 still looks cheap to me, and I think we'll see higher numbers from here. Now, there's a couple of things you need to be looking at and tuning up are your trend lines. Now, to get into the trend, you're either looking for retracements back to these resistance trend lines, or you're looking to get into the market and start averaging in where they are now, and then set your plan up so if it does continue to rally, your position builds, or if it breaks key levels on the downside, you get into those things as well. Now, Euro, and it looks set for 110 at least. Sterling down to 130. The figure, Aussie, minimum 68 cents. And Kiwi, well, Kiwi's going to hold up a little bit better, I think, than some of the other pairs, but still heading lower. Now, these numbers that I'm sort of throwing up aren't sort of just make-believe, right? I'm just trying to have a bit of a guesstimate of where those currencies go. Now, just looking at the key theme, this is what you need to get your head around. The dollar range is hawkish Fed stands out amongst all the other central banks, right? This is the plan. They have got a plan. As I said, I've already run through that. Unless something weird geopolitically happens, right, I can't see the dollar turning around. Now, when you think of this as a trend, it doesn't mean the dollar just accelerates to the top side. Right. And this is a pretty good example. See how the dollar block here in the Asian session is up and the dollar's down? Well, that's going to be the cycle throughout the coming weeks. Right. So, just say North American session, the dollar rallies as that session dissipates, right, closes down. There's some position squaring and the cycle continues. So I would expect the dollar block to probably rally in Asia. And as we go into the European, North American sessions, the dollar starts to rally and we go forward from there. Now, most importantly, in this situation, the data, right? Keep a close eye on the data. European data, Aussie data, Kiwi data, UK data. It all comes into play now, right? The weaker that data and the stronger the US numbers, the easier this move will be, right? So don't get overzealous, right? Let me just come back to the charts. And what I mean by that is don't put all your eggs in the one basket and think, oh, well, this is it. This is the trend we've been looking for. But it will potentially happen. Plan your entries, your stops, plan the pairs you're most familiar with. And that's the best way to get into these opportunities. Now, if you've missed it, well, there could be opportunities where the thing rally, like some of these currencies rally above their short-term resistance and continue down. In my opinion, after seeing this sort of set up, and the way the gradual dollar rise has happened, that gives me even more confidence to get on the move, right? It's up to you to where you get in. And don't forget, this is going to get a little bit loose around Thanksgiving. Thursday, Friday, pretty thin trading as we go through the week. We'll see how it pans out next week. But I think the dollar will be higher by the end of the week and also early into next week as well. All right, guys, have a good one. All the best. Cheerio.